we have a very special guest tonight, Mr. Brett Oland from the Bow Valley Credit Union. We're really happy to have him. He's got a lot to tell us tonight, and if he doesn't get through it all, then we're hoping that he'll come back and grace us with his presence again, maybe in October. We've got lots of great information to discuss tonight. We don't endorse businesses, but we would like to suggest to you that if you are looking for an alternative to the regular banks or treasury branch, that you, at least in your studies and investigations, that you consider Bow Valley. They, I believe, have four branches, but you can do a lot of your banking online. So please do at least consider them in your research. Tonight, as in all of our other webinars, we will take questions in the Q&A. If we don't get to your question, we do apologize. We're not trying to avoid anybody. Sometimes the questions come fast and furious. Sometimes the moderator chooses a question that's more appropriate to the dialogue that's happening at that moment. So please be patient. We try to get through everybody. Again, we do welcome you. I'm going to turn it over to Tanner and we'll go from there.
Perfect. Well, thanks so much, David. And again, welcome everyone tonight. I am very excited about this webinar, to be entirely honest. And you can tell because I'm an economist. But even if you're not an economist, and even if you hadn't studied or haven't studied economics and the business of macroeconomics and these big fancy words like, interest rates and compound rates and gold standards and backing this or that currency, all of these things, I think tonight is going to be so informative. And I'm so excited that all of you are able to join with us. So Brett, welcome as well. I know everyone's excited to have you on. And today, I believe we're talking, well, about the banking system and Fintrac. But maybe first you'd like to give our audience just a brief introduction about yourself and who you are and how you got interested in things of this nature.
Sure. Yeah, I'll give you a bit of background about myself and then get into Bow Valley Credit Union. So my name's Brett Oland. I've been in the role of CEO of Bow Valley Credit Union for about 3.5 years. Prior to that, I was on the board of Bow Valley Credit Union for about 7 years. Been involved in one way, shape, or form with banking for about 20 years. I'm a CA by trade. Don't hold it against me that I'm an accountant. CPA, I guess now. I also hold a designation in Institute of Corporate Directors, and I went to school in Calgary at the University of Calgary to get my BCom. A little bit about Bow Valley Credit Union that's probably very good for the context of this conversation. We've been around for about 70 years. We're considered a smaller credit union. We're about 500 million in assets, which is fairly small in the grand scheme of things for banking. Probably the interesting part of the story that I like to talk about is about a year ago, we made a conscious decision not to force our employees to get vaccinated, which doesn't sound so scary now, but at the time it was actually very controversial. And whatever camp you're on, whatever side you're on, it doesn't really matter to us. We accept all people within our organization. But the thing is, in my mind, anything that has to do with health is people's individual decision. We saw a really good positive uptake, not only from our staff, but also people that were really interested in our organization. Fast forward 3 or 4 months later, to the Freedom Convoy, the trucker convoy, and with the Emergency Act that came out. And we also took the other side to that and said, wait a minute, we're not just going to arbitrarily freeze people's accounts because somebody said that they donated $25 or something like that. And we received an incredible amount of positive reaction to that as well, that we were actually taking a look at people's accounts prior to just arbitrarily turning off the valve and freezing them out of their bank accounts. And so we're hoping to continue this momentum because I think we're really onto something here. It's a service that people need. Our board is behind us. We've got members that are behind us. Our staff are behind us, and hopefully we can help more and more Albertans with this strategy as well. So, but I can sort of get into it's a pretty scary presentation. I don't mean to sound like a fear monger in a lot of these things, but I think it's education is probably the key to take away the edge of that fear. And if you understand it just a little bit better, you're probably much better off than most of the population. So
That'd be excellent. If you'd like to get right into it, we're happy to hear it. Or, well, we might not be so happy to hear it, but we're glad you're speaking on it. So give her.
okay, sounds good. Let's see if I can share my screen here. Just give me a second. Is that coming up all right, Tanner?
Looks great.
Okay, so there's a bit of information about me. There's my email at the bottom there. I'm happy to answer any questions if they don't get answered in the webinar today. That's my personal business email, so it may take me a bit of time to get to it, but happy to answer any questions about all this stuff as it can get pretty complicated, and you know, we'll just take a periphery summary of it for today. So just a little bit about the agenda is trying to ensure that people get a better understanding of what financial institutions are currently monitoring, as well as sort of what's on the horizon with banking in Canada. Fintrac is a big one. There's a lot of fancy acronyms there. We'll get into that in a little bit. Open banking is another big one, and as well as central bank digital currencies if we have time. Hopefully we'll have time to get to that. These are, in my mind, in order of prevalence right now. So Fintrac, we actually live under that yoke right now. Open banking, as you'll learn, the government is basically trying to instill that. The federal government's basically trying to instill that within about 18 months. And central bank digital currencies, they actually don't have a timeline on. But I think it's important that you understand it, as I think it's very top of mind with a number of countries around the world. So getting right into it, PCMLTFA and Fintrac, big acronyms, like I say. So this is existing regulation and technology. So the PCMLTFA is the Proceeds of Crime and Money Laundering and Terrorist Financing Act. I'll just call it the Act from now on because that's a bit of a mouthful. And the Fintrac is another acronym that stands for Financial Transactions Reports Analyst Center. And we'll get into a little bit about these. So a bit of a background on these things. I will take a bit of a slant towards government in some cases, sometimes positive, sometimes negative. At the end of the day, you should know that I don't really like much government at all. But the thing is, it's sort of easy to pick on certain targets in some of this, and it's very difficult to not politicize a lot of the conversations that are happening today. So apologies if I bash your candidate or something like that. So background on the Act, and I think it's important to recognize the timing of all these things, because there's very critical time periods that happen throughout this, and I don't think it's a coincidence in some cases. So back in 2000, they introduced the Act, and that's when Fintrac was created, and they made sort of various amendments over a number of years. And then in July of 2019, they did a pretty big overhaul of Fintrac with amendments that came into force in 2020 and 2021, which sort of line up pretty nicely with a number of historical events within all our lives. So regarding the Act, this is the government definition, is to detect and deter money laundering and financing of terrorist activities. So off the top of just saying that actually sounds not too bad. You know, nobody likes terrorists, and we want to keep them at bay as best we can. So, and you'll find that there's a lot of these things that they sort of gloss over exactly what they do. So the Act facilitates the investigation, persecution, and money laundering, terrorist financing activities, which includes reporting, record keeping, client identification, and compliance. So a big breadth of what they do as an organization. They control a number of organizations through what they do, Fintrac being the major focus that we're going to talk about tonight. but they also have a direct line to the federal RCMP, provincial police, as well as municipal police forces, as well as the Canadian Securities Intelligence Service, Public Safety Canada, and Global Affairs Canada. So there's a lot of lines that are sort of going out into different regions of government. So now specifically on Fintrac, it's a government agency that collects, analyzes, and discloses financial intelligence on suspended money laundering and terrorist activities. Again, very broad definition, pretty glossy, sounds like they're up to good stuff. But it was actually through the detection and prevention of deterrence of money laundering and financing terrorist activities that they bucketed in the Ottawa trucker convoy and the Freedom Convoy, and was really the result, and all the negative feedback through the financial institutions came through Fintrac, and now this is actually how they could do it with this tool that they use through Fintrac, that they could freeze people's accounts through. So now a little bit more about Fintrac here. You can see a few stats about who heads them up, their budget. They have a number of employees, and there's your friend and mine, Christina Freeland, that's at the Minister of Finance, that's heading up Fintrac, which is pretty interesting thread to see there. I think it's pretty important to distinguish terrorist financing versus money laundering. The difference being on my left hand of the screen there, the traditional money laundering comes from illegal funds. So that would be drug trafficking, ransoms, weaponry, that type of thing. So illegal trade is then put into the banking system and then integrated back into the system as legal funds. Terrorist financing basically works backwards, and so they take legal funds, they put it into the banking system, they layer it around, hence the laundering aspect of it, and then they use it as terrorist funds. This terrorist financing was actually the bucket that they put the Freedom Convoy under, is they considered it terrorist financing. And we'll get into a little bit more of what happened as a result of that, considered terrorist funds. So pretty much we just talked about this, but this is how they bucketed the trucker convoy in as extremists, called them a terrorist group, and froze their accounts via the Emergencies Act. And I don't think it's a coincidence in timing, but in June of 2019, they also worked with another department, the Public Safeties and Emergencies Preparedness group, and announced new initiatives to address extreme online content. And I think this may been in preparation to a lot of discontent within public society. So a little bit about Fintrac and how it ties into what we have to do. Bow Valley Credit Union and all financial institutions are responsible to be compliant with the Act. Non-compliance can result in criminal or administrative fines. The board can be hung out to dry, and we also have to implement policies and procedures to monitor this performance. I feel a little bit regretful to not see this coming, but it was sort of baked in a cake 20 years ago, 25 years ago, but there's not a lot we can do about it currently, but I'll come up with a couple of solutions a little later. So as mentioned, we do have a number of legislative requirements, and this is what we actually have to report on via Fintrac. So it might be interesting for you to know some of this stuff. So any large cash transactions over $10,000 we have to report on. Any wire transactions we have to report on that are $10,000. Any suspicious transactions, for example, if somebody says, oh, remember that kidnapping? I got a bunch of money out of that. So, that's a bit of a suspicious transaction that we would have to report on, as well as unusual transactions. So, for example, if we have John Smith comes in the door and all he ever does is deposit his check and buy groceries and stuff like that, and then he comes in the door with $20,000 cash one day, we would consider that an unusual transaction. We're required to basically follow up with that. As well as if we're in the knowledge that there's terrorist property to report, we also have to report that. And anybody that's a politically exposed person that is sort of on this master list that we have to treat a little bit differently than the common population. So that being said, with the watch, there is that watch list of people on it, and a lot has to do with people that have committed fraud in the past or terrorist activities in the past and that type of thing. This is the list that you don't want to get on. My suspicion is that a lot of people involved with the trucker convoy did get on this list that we actually have to compare notes to do. And it's not like that we can't do banking with them, but we may need to limit their activities to some degree in that regard. So just so you have an understanding what the penalties are to a financial institution, they are significant. And it's also worth mentioning that we do have to follow the law. It's important for us to follow the law. I think if we don't, then ethically, what's to stop us from following the law in any other regard? So if you wanted us to come to us and get us to break the law, we're probably not the spot to go, but we're definitely the people that are going to push back against it. So as you can see, the criminal penalties are significant for not reporting to Fintrac. $2 million, 5 years imprisonment doesn't sound very good to me, but so they are very significant, the penalties that we would incur if we were basically notified that we were in breach of something. So this is the report that actually came from the Fintrac website, and it sounds all glossy and great. They're catching all these fraud criminals and these drug criminals and things like that, but they don't really talk about the stuff that affects everyday people. They only sort of gloss over that and talk about, look at all the great things that we're doing. But up until even just a couple of years ago, they weren't doing anything with this information. They were basically just collecting data. And this is very recent that they've actually reacted to this information, and probably only happened in the last couple of years that they've actually just reacted to the data that they've been collecting for the better part of 20 years. So some recent changes that are really interesting out of the Act is they now require crowdfunding platforms to be registered with Fintrac. And so this is a direct result of the trucker convoy, because a lot of their funding was via the crowdfunding platforms. So now they're trying to close the door a little bit more on what can sort of come in and out with the Fintrac reporting. What can you do to sort of push back against this? I as you can tell, I don't agree with a lot of this. I don't like being spied on, and I'm probably preaching to the choir on this with this audience, but I think we need to be pretty vocal about talking to our local politicians and our federal politicians that we don't appreciate being spied on, and that this tracking of Fintrac is not appreciated. Our board and myself recently had a conversation with Danielle Smith, and maybe many of you have read the Sovereignty Act and what is planned there. We did have a conversation with her of how we can get out from under the yoke of this Fintrac. And basically her proposal is, and granted she's a politician, so I'm not sure if she'll be true to her word with some of this stuff, is basically telling things that aren't in the best interest to Albertans no to Ottawa. We will not be enforcing this. And basically she tells the police force that we're not enforcing it, and that's sort of the end of the story. And then basically we can go about our way and not need to worry about Fintrac. But this is sort of the primary point that I'm worried about banking right now is, taking away people's individual rights and freedoms and liberties because of something as silly as a $25 donation to a trucker convoy. And that's really what we stand for as a value. We feel as an organization that we've stayed true to our values, and the landscape has shifted from one underneath us. So we don't have an opinion about what your political agenda is. We don't have a care in the world about what your medical rights are or your medical status is. We're just here to be a financial institution, do banking, end of story, period. We don't want to get away in the way of any of that. So that leads me to my next point. Another thing that you can do to get out from this yoke is join a credit union. So a key difference between a credit union and a bank is that we're regulated by an organization called CUDGE, the Credit Union Deposit Guarantee Corporation, where we offer 100% guarantee on all deposits that come into our organization. And we're not regulated by OSFI. And OSFI regulated institutions were the ones that were dictated to by the government that each employee needed to have a vaccine mandate, as well as they didn't seem to have any objection to freezing anybody's accounts. So what is OSFI? It's an independent agency of the Government of Canada responsible for the supervision, regulation of banks, insurance companies, trust companies, and loan companies. And there's our good buddy, Christina Freeland, who heads up that department as well. So food for thought. So as mentioned, OSFI did enforce the vaccination mandates as well as had no objection to freezing bank accounts. And this includes all your major banks, your RBCs, BMOs, CIBCs, TDs, Bank of Nova Scotia, Canadian Western Bank, essentially any organization that has bank in their name or that's a federally regulated credit union would be under OSFI. And believe it or not, this is something new that even we discovered and ATB discovered. OSFI also is the regulator of ATB, which was, I think, a big surprise to ATB when push came to shove during the trucker convoy. So also knowing that, not all credit unions are created equal. Although, as mentioned before, we have to follow the law, we have to follow Fintrac, there is some comfort in knowing that credit unions are one further step away from OSFI from Ottawa. And I think a good question to ask your local credit union or your financial institution is whether they required to enforce vaccination mandates or whether they froze trucker accounts. And I think the answer to that will really, give some insight of what type of organization they are now and what type of organization they're likely to be going forward, as it seems to be inevitable that things are going to get worse before they get better. Anyway, I can pause here. This is the end of the first section on Fintrac. Before we go into the next section, which is kind of a different topic, I'm happy to answer any questions that people have at this point.
Perfect. So if anyone does have any questions, as David mentioned, at the bottom of your screen is a little box called Q&A or chat, and you can send your question in there, and it'll be passed off to me. And then as they come in, I can read them. The first one we have at present is, so, you mentioned at the end how different credit unions maybe operate differently. And so just on your scope of work, or just with your scope of work, do you know anything about service credit unions in Edmonton? Meaning, do they operate the same as Bow Valley Credit Union, or are there differences and nuances with each credit union that an individual visits?
So really good question. Each credit union is actually independently managed by its own management team and board of directors. So almost you could think of them as a completely separate organization. Although we do operate as a cooperative, and one of the cooperative principles is to cooperate with other cooperatives. They are not affiliated with us. And I think it would be in your best interest is to ask those couple of questions that I had at the end, if they enforced vaccination mandates and whether they froze any Freedom Convoy accounts. I think that answer right there will give you a lot of insight on sort of what side of the fence they're on with service.
Right. So then with, for example, the mandates with credit unions, is that specific whether or not the specific credit union enforces the mandate? Is that specific to the manager and to the management at that particular credit union? Or
Correct.
is there there isn't some oversight that says all credit unions here should mandate so-and-so?
No, and so even our regulator has stepped aside from this. And so if there's about 12 credit unions in Alberta, and some are religious credit unions. And the regulator's perspective is that we don't tell people what religion they should be. Why should we tell them what health status they should be? And that's basically their perspective on it. So it's up to each individual credit union to come up with those policies and procedures and work within their own organization. And we are completely separate in those respects.
Right. Now, here's a question that's maybe a bit more broad, and perhaps you might want to answer it after, just let me know. But someone is asking if Alberta can form its own bank, which I suppose we can talk about the Treasury, but also would it be possible or feasible to, this person's asking to ban banks that participated in freezing accounts, but even to punish banks that participated in freezing accounts, or is that something that's not feasible?
Well, it'd be an interesting question to pose, that's for sure, because my suspicion is if you told the banks out of Toronto how to operate and how to act, they would basically shut up shop in Alberta. And the reason why I say that is typically in every downturn, they tuck tail and run from Alberta. And that's not just on the oil sector. It's just about in every sector. They tighten up the spigots and basically say, we're not lending in Alberta anymore. So I would not be surprised if they basically just picked up roots or tried to sell it, their branch book or something like that. But, it is feasible, but probably step one would be creating a bank act within Alberta and recognizing that it does have boundaries. But that's largely a piece what credit unions do already. So we largely trying to stick within our geographical sector. So we can lend outside Alberta, but typically we don't, just because we sort of honor those borders at Saskatchewan and BC.
Right. Another question, an excellent question from Gerardo. He says, if I understand correctly, credit unions are not shielded from Fintrac. What would be the benefit then to join a credit union compared to a bank if both have to follow Fintrac? Also, other than Daniel Smith, have you talked to any other candidates?
No, I haven't talked to any other candidates. Good question. No, we are all under the same banner with Fintrac, and that's in as I mentioned, a real folly of this whole system, and really where the feds have us is Fintrac is broad-based, and we all have to follow it. But what is different is we can actually push back, because OSFI doesn't regulate us. Our regulators do regulate us. So if somebody's going to push back, it would be OSFI to who? And really that's the question you have. Who is OSFI going to really complain to? They could try and complain to the RCMP. They might do something about it. I'm not sure. But that's where we sort of need a bit of more of a political shield, like you mentioned. Specifically, we talked to Daniel Smith just because we had her booked prior to her leadership run. And that's why we were talking to her. We were more interested in the sovereignty piece and what she had to say around that and what she had to say around the Sovereignty Act. But that's really our best line of defense against Fintrac as it's already enacted is we have to basically get political to get around this.
Right, perfect. Now there's a question here about digitizing and digital currency, but I think if we go to your next point, I know you have three, maybe we'll try and hit the digital currency tonight if we have time. So maybe Brett, I've got a couple more questions. We'll save them until the next section. If you want to talk about your second topic, that'd be fantastic.
Sure, great. Thanks for the questions. Let's see here. So open banking is the next topic, and a lot of you probably haven't heard of open banking before. So, but we hope we can give you a little more informative about what this is. This is even spookier than Fintrac, and I've even created some videos in here to look a little more spooky than they normally would, because it is some scary stuff, and we're around Halloween, so we'll continue on with that. So Essentially, open banking allows consumers to direct financial institutions to share their data with third-party providers using what's called an API, or an application program interface, for agreed upon duration and purpose. Again, pretty broad definition. I'll get into what that is. So something very first generation open banking would be something like screen scraping. And I'm sure a lot of you have seen some of this. For example, a form comes up online, you type in your name, and then all of a sudden it populates and wants to populate your name, your address, your phone number, your postal code, this, that, and the other thing, and all your preferences and things like that. That's effectively screen scraping, but open banking is basically that on steroids, and basically sharing all your consumer financial information. And I'll get into a little bit more about that. So what is the government doing right now with this? They're actually developing a framework that codifies the rights, obligations of the participants, technical standards, security requirements, liabilities, and recourse structure for sharing financial data online. Again, sounds pretty glossy at the top. These are some of the financial apps that are out there currently. I'll pick on Mint right now because it's probably one of the more common ones. It's a financing app, and so basically what it does is take your personal income and it tracks your expenses and basically spits out, oh, do I have money to go for a Starbucks coffee today? That type of thing. So it's really a budgeting tool is what it is. And so effectively what open banking is, it would go, if you agree to it, what it would do is take your financial information from your financial institution and basically pass it on to these third-party providers. But more than that, it actually would grow out and grab all the financial information that you have from all other financial institutions that you agree to give it access to. So if you have an account with RBC, BMO, TD, Scotiabank, what it would do, it was basically say, do you allow this? And I'm sure everybody would read the terms and conditions. And basically what it would do is run out, grab all your information from all those sources and bring it back into one source. And so that sounds pretty scary to me. Maybe people think that's very convenient, but I think that's a big trap that we're in these days. Is convenience also takes away a lot of our freedoms because a lot of this information is out there. I don't know where it goes. It flies around out there, and nobody seems to know what happens to it at the end state. So the government's definition of open banking: securely and effectively transfer financial data, financial institutions, and accredited third-party service providers. The transfer gives consumers access to a complete financial picture of other useful services to improve their financial outcomes. Again, very glossy, sounds great. They've got a section there where they're talking about financially marginalized Canadians. They want to help, they're always there to help. So I think it's important to dig a little deeper on exactly what they mean when they have open banking. Further into it, you realize if they implement open banking that the Bank of Canada, the Government of Canada, wants to manage the ongoing administration of the system. So that's particularly scary to me, because what would happen is open banking allows for all this consumer data, or your personal data, to fly around between different financial institutions and third parties with these APIs. But the Government of Canada wants to be the administrator, and therefore will have access to a complete financial picture of anybody using open banking. So a little bit more of the background of this. There's our buddy, Christina Freeland, right at the tip of the spear again. More so, we're going to be, I've got a few videos lined up about Randy Boisneau. I'm picking on him today because he is an MP out of Edmonton, and we could probably tap him on the shoulder and say, what the heck you doing here, in a lot of cases. So I've got a couple of videos. And first one is just who Randy is, and tap me on the shoulder, Tanner, if you can't hear this video.
Can't hear it just yet. Walter, is there anything that we can do to plug in the audio?
Not working there, Tanner?
Not yet. I can watch it. I'm watching it, but I can't hear it. And if I weren't an economist, I might be more help with the technical aspect, but but I'm not. I was never good at the statistics aspect of economics because it involved a computer, and I'm terrible with computers. So Walter's saying that he can't access the audio, so that's fine. So maybe if you want to just give it, just a brief overview of who Randy is.
It may be on the share screen, where you share the screen, there may be an opportunity to tap in on audio. Seems to me that there is something there that allows the audio to happen when you're showing the video.
Sure, we'll try really quick, and if this doesn't work, then we can go on to the next point. We'll try this maybe.
No, I've got nothing. I tell you, typical technology.
Okay. Typical technology. Anyway, basically it goes. He introduces himself as the lead for open banking and tells you about all the benefits of open banking and how great it's going to be. And he basically talks about how the government wants to be judged about what they've done in the past. And this fine individual, me, basically asked the question, what about open banking and in relation to the Freedom Convoy? And how would you use Canadians' information using Open Convoy? And he gave a pretty typical government response and basically said, the government's only going to look at your information once. And I don't take his word for it in that case, that he would only take a look at the information once. So this is really what the bad news of the situation is rather than your financial institution sharing your information directly with the third-party vendor or the other financial institution, the government of Canada wants to get in the way. And basically all your financial information goes to the Bank of Canada, and then it goes to the third-party vendor. And then all your information from the third-party vendor comes back and gets shot to you. So they act as an intermediary to it. And if you have the mistrust that I do of governments, I think that's a very bad situation. The good news is, again, for credit unions, a number of smaller credit unions banded together, raising concerns that open banking will introduce overwhelming compliance and regulatory costs. And we would have to invest in technologies that we couldn't sustain. So we described this regulatory burden, and we proposed an opt-in system for credit unions that want to be participating within open banking. The good news is the recommendation was successful, and there will be an opt-in system framework for this. And so at the end of the day, I think it's important, again, what can you do about this? What can you do about this information? You need to ask your financial institution if they're going to be opting into open banking. And if they are opting into open banking, you have basically agreed to share your completely financial picture with the government from all sources. Sounds pretty scary to me. On that same front, Bow Valley Credit Union will not be participating in open banking, and we will choose to opt out on this. And this is the end of the second section, Tanner. Happy to answer any questions that people may have about open banking.
Perfect. So same thing as last time for our audience. If you have any questions on open banking, which to me started out being a little bit mysterious, but I think Brett's cleared up a lot of the questions. Again, add them in the Q&A at the bottom or the chat as well, and I'll get to them as quickly as possible. One that we just got in right before we transitioned to your second point here was actually still back on Fintrac, and it's a good question, so maybe I'll ask it quick. Randall says, I thought credit unions came under provincial jurisdiction. He said, so why does the federal level dictate Fintrac compliance?
It's a law that's all encompassing across the country. And that's a really good question, because basically somebody in the Alberta government should really be standing up and saying, no, you can't do this. I think our constitutional rights as a province have really slipped over the past number of years. And I think it's important that we start exercising those constitutional rights going forward. Because really somebody should have been asking the question right at the beginning and basically putting our foot down and saying no. But there seemed to be no political will at the time for it.
Right. So now with regards to open banking, basically Mel is asking, can it be overruled in Parliament? How real is open banking? Is it a clear and present threat?
They've already started the process of building it. So that they're starting the framework of building it. And it's too bad the videos didn't translate across, because they have described what they're actually doing there. But they basically go on to say, if they didn't have to go through the legislature, this would be a lot faster and we could get things in place a lot faster. And to me, that's a big red flag. That's like, oh yeah, you really want to push something that this aggressive without having debate, discussion, and putting it out to the public about it. I think that's very, very dangerous. So I think this is probably something that could be squashed at a federal level, but it would require, again, the political will.
Right. So, and this is for my sake, maybe for the audience's sake too, but so as I understand it, based on your mini presentation, so this open banking system basically lets, and I'm oversimplifying, banks to share your records with other banks. And so it gives lenders, who are banks, basically access, right, to your entire banking history. So when you go to apply for, a loan, you don't really have a choice except to hand over all of your banking information. Is that correct?
Correct. If you would opt into that open banking, my guess is that most financial institutions will do that. Whereas, I'm the same way too. I don't generally share my complete financial picture with anybody, let alone my bank, even though they want it. I think probably the bigger risk is that it's just out there on the internet, as well as in the hands of the government. But you're exactly right. Is that's how they would adjudicate loans and base their loans, with all this pulled financial information.
Right. So then I have one of our attendees is asking, would it be better therefore to make purchases with a debit card over utilizing like a classic credit card, with regards to purchase information and so on? Or does it not matter under an open bank system?
It really wouldn't matter under an open banking system, because if you basically agree to it, they would have complete access to your complete financial picture. So they could probably take a look at all your transactions that happened over the past year. So if you opt in with, say, MasterCard or something like that, it would track all your transactions there. On the banking side level, it might just have one payment to MasterCard, so it wouldn't have the detail, but it would know that you made this. And if they tie together and MasterCard's on board with open banking, then they would have access to it all.
Right. So now Michelle is asking, so if she says, if we've signed up for open banking, not knowing it, is there a way that we can opt out?
Yes, there is. And basically it might take you a few hoops to jump through. Open banking is not actually a reality right now. So it doesn't really exist beyond just what's out there right now with screen scraping. But it might be up to the individual financial institution where you could put a toggle of whether you're interested in having your information back and forth. But my guess is they'll make it very difficult for you not to opt in to open banking.
Right. So now Grace is asking, is there a risk that the federal government will invade, basically, and force you as a credit union to participate in that open banking program or any other of those banking regulations for that matter?
Again, our regulators are different, so we're not, they may be able to go through the route of OSFI, the Officer of Superintendent Financial Institutions, and basically dictate that the other banks do this, but they wouldn't be able to do it to us just because we're a different regulatory body. It'll be really interesting to see what happens when they basically put it out there to the bigger banks and things like that, because this is no small undertaking. This is very technologically involved. I think 18 months is very aggressive. Hence, we have a bit of a runway for something like this, but the federal government is aggressively pursuing it, is basically the message.
Right. So as individuals, what would you recommend we do to most effectively stop this advance of open banking? What can we do today is what Mel is asking.
Right. Probably the number one thing is talking to your politicians again, and basically saying that you're not interested in absorbing this open banking forum. If you don't want to get that aggressive, or you think you're going to get nowhere with the politicians, you need to talk to each individual financial institution and basically ask the question, are you opting into open banking? And my guess is there'll be at least a handful within Alberta. Probably not the big Schedule 1 banks like your BMOs, your your Royals, your Scotia banks, that type of thing. They will likely do the open banking, but your smaller financial institutions may just say, no, we're not doing this.
Right.
You'll find that it will make your life more difficult not to opt into open banking, but that's sort of my point too, is that they make it very, very simple to opt into these things, and really you don't know what you're giving away when you're using these tools.
Right. So then are you a proponent that cash is king? Do you believe in using cash as much as possible?
Yeah, I get into that in the next section, but yeah, that is a big proponent, is cash goes a long way. You know, unfortunately, sometimes it's just unavoidable to use the card or debit, but I think sort of the more, if you want to push back, that's a really good way to do it.
Perfect. Well, if that leads into your next section nicely, I think we should start on that. And then if, again, for the audience, if they have questions as Brett's speaking, just type it into the chat. If I haven't answered, or if Brett hasn't answered your question yet, we'll try and get to it after his third subset. So if you want to give her for digital currency, that'd be excellent. Excited to hear about it.
Sure. As mentioned, there's actually no timeline on central bank digital currencies, or I'll call them CBDCs. But the thing is, I think it's important that we keep it top of mind, because it is coming very prevalent in the world, and there seems to be a lot of push in the Western world to move to a central bank digital currency. And again, since it's close to Halloween, I will hopefully scare you into believing that this is not such a good thing. So what is a central bank digital currency? This is straight from the Bank of Canada's website. Simply put, a central bank digital currency, a CBDC, is just a digital form of money issued by the central bank. If only it were that simple. So basically, it would work just like a debit card or something on your phone. You'd have a bunch of credits in your account, and basically it would just act like digital money. So there would be no physical notes of you know, a $20 bill made out of paper or polymer, whatever they're made out of these days. Again, the timing is suspicious around this. This paper that I got all this information from, that seems to be the most current, came out in February of 2020, sort of right at the height of COVID. So some key differences between a traditional currency like your paper currency or loonie versus a CBDC. Cash can be a burden to carry. CBDC is very, easy to transfer. Cash is not very trackable. CBDCs are very trackable, and likely you're being tracked on every transaction that you're doing. Traditional currency, they're tangible, of course. CBDCs are just out in the cyberverse, not really tangible. Traditional currency is difficult to create. I'll get into that a little bit more. CBDCs are very easy for the governments to create because it's basically just a couple of strokes on the keyboard. And of course, traditional currency is less efficient. Maybe you have to run down to the bank. Maybe you have to run down to an ATM to get cash, where it's really easy to use CBDCs. CBDCs are not implemented within Canada. We still have a traditional currency system, even though they say that, oh, well, everything's online, it's just digits on a scoreboard anyway. It is actually, in fact, a lot different, which I'll get into. To give you a bit of the sense of urgency about central bank digital currencies, and I don't know about you, and here I go slamming on governments again, but I don't know any government that's been really proactive on anything. And they seem to be very proactive on getting central bank digital currencies up and running. So they're talking about building this capability, and they're talking about we need to prepare and things like that, which is very interesting in my mind, because I think they're basically going to shove this forward come hell or high water unless we do something about it. So they've also mentioned on their websites there's a couple of situations where they would launch CBDCs. For example, if you continue to see a decline to the point where Canadians are no longer using cash. So there are some businesses out there that don't accept cash anymore. I think that's a mistake if your objective is to sort of push against the CBDCs. Also, if further alternative digital currencies, for example, a Bitcoin or Ether or something like that, become mainstream and businesses start taking it, central banks do not like competition. So anything like a CBD or a Bitcoin or an Ether or something like that, they're going to push back against, and they're going to regulate. Right now, cryptocurrencies are a little too clunky, so I don't think they're worried about it, but they are using the technology involved to develop CBDCs. But if, for example, a Bitcoin did become mainstream, you can be sure that the central bank would step in and try and stomp on it very quickly. So there are, and the Bank of Canada recognizes that there are a wide-ranging bunch of implications, both for the economy, financial system, as well as banking operations, and I'll get into that in a bit, because they do recognize that that'll potentially adversely affect stable deposit funding for banks, as well as credit unions. And they always throw these little jabs out there of how they might implement this, but cash may become a vehicle of financial abuse and laundering and terrorist financing. They'll stick that out there because it's basically a use case to get it implemented. So the biggest concern with CBDCs that I have is the government could create money at will without the use of the bond market. And what I mean right now, currently, they can't, whether you believe it or not, they can't just create currency out of thin air. What they have to basically do is they have to go out to the open market and sell a treasury to basically gain that money. And so there's two basic sources of currency within our economy. Either the government at that point can basically inject it into the economy like they did with a COVID stimmy check or something like that, or they can give reserves to a bank or capital to a bank, and they can lend it into existence. So it's a lot different than a CBDC in the fact that with a CBDC, you don't need the treasury market, and you could basically just create a CBDC out of thin air, and you would need the treasury market. And the treasury market's important because if you go out and print money until your heart's content, basically the market would punish you for that. And what would happen with those is the bond yield would spike, and effectively it would go up 4, 5, 6, 7%, 10%. And the government would be forced to pay the interest on those bonds to whoever bought them. And this is sort of something that banana republics do. You saw it in Weimar, Germany. You saw it in Venezuela recently, where they basically just print money and they try and sell these bonds, but nobody goes after these bonds unless they get to a point where the interest rate is so high that they're willing to accept the risk on these things. So the big risk in my mind with the central bank digital currency is that everybody in Canada, as well as every business in Canada, will have an account with the Bank of Canada. So effectively, the government could deposit money in or take it away at will. So for example, rather than passing out stimmy checks through the mail, they could just type a few numbers on a keyboard and voila, you have money in your bank account at the Bank of Canada. They can also, with this tool, control spending via time horizons. So the technology is there that, for example, maybe you have $100 in your central bank digital account at the Bank of Canada. They can actually put a time limit on that, say you need to spend this by the end of the month or it disappears. Or further restrict it, you need to spend it on groceries and you can't spend it on this and you can't spend it on that. It basically would be that much control. And what they would do is track all that spending and income, and there would be behavioral implications for it. So if I knew that people were watching the number of times that I go to the liquor store or something like that, or the bar, maybe I would curb that down a little bit. So there would be behavioral implications if somebody was sort of overseeing that. So a big implication would be the end of the commercial banking sector. So effectively, you wouldn't need any banking sector in Canada. So Royal would disappear, RBC would disappear, or sorry, BMO would disappear. Credit unions would effectively disappear. And I think you would start to see constant malinvestment by governments and investors. So if the Bank of Canada could basically create CBDCs at will to fund these pet projects for the government that don't have any results and don't make any money, that's effectively malinvestment. And you wouldn't have a vehicle like a commercial bank to basically take an individual look at every single loan. So we take a look at every single individual loan. Say, for example, you want a loan on a house. Well, we would take a look at your credit score, and we would take a look at your employment history and decide, you know what, you're a great bet. We want to lend you money. That wouldn't happen with CBDCs. What would happen is the government would basically say, you've got a great social credit score. Here's some money for a house. And at the end of the day, you might default on that loan. You might never make a payment. And frankly, the government doesn't care because they have an infinite balance sheet and they could basically just continue to print CBDCs. So you can see how this leads into other problems where there'd be just a lack of price discovery. I think you'd constantly be overpaying or underpaying for items. There would be a lack of investment. There would be perpetual debasement of currency via inflation, because they would continue to feed their pet projects and inflate things away. And I think there would be mass shortages because there would be no investment in the country, and it would make Russia look like a kindergarten picnic in the Soviet era. So some pretty scary stuff. Also, it would be the end of privacy. They would have access to every single financial transaction that you do. Undoubtedly, they would increase your taxes. And the technology is there. You may think, oh, you know, we might get a bit of an increase in tax. Well, how would you like being taxed on a monthly basis, a daily basis, an hourly basis? Because they would have the ability to do this if they saw too many central bank digital currencies in your account. All of a sudden there's a new tax created. There you go. And as well as I mentioned the social credit score, and maybe some of you have heard this of coming out of China, but they do have a social credit score in China. And if you basically speak against the government or something like that, then you get a black mark on your social credit score. And then maybe you wouldn't get a loan as easily, or maybe you have to pay a higher interest rate, or perhaps they garnish your wages or something like that pretty easily. So pretty scary stuff and into privacy. And I think it would be the end of support for anything that's against government narrative. So there would be no support for things like the Freedom Convoy. There would be no money to fight back against the governments because they wouldn't allow it. And effectively, democracy would no longer matter because the governments would do whatever they wanted. So there are two models that they are considering. This is right from the Bank of Canada website again. There's something similar to the current model where there's a mix between private and public partnership with security features, but you can be dang sure that that they'll add some features that work in their benefit, as well as the second model, which I sort of discussed the implications of that, where basically they would take control of and the relevance of commercial banks would no longer be there. So if they chose the second model, consider it the end of commercial banking in Canada, consider it the end of privacy from government, and also consider it the end of support for anything against the government. So I always like to come with a bit of solution. So this is where the question came up. Keep using cash, so that they've noted already that that's one of the triggers that they're looking for is the decreased use of cash. So you may as well keep on using that cash and while you can, as well as talk to your politicians. This has a very slippery slope, and maybe you agree with everything the government's doing. Maybe you agree with the Freedom Convoy, the trucker convoy. You know what? Those dirty rotter truckers, they ran over my cat when I was 4, so I don't like truckers, and I want them to freeze all their accounts. That's fine and dandy, but what about if something comes into play where it's something really important to you? For example, your dog or something like that, and they decide that everybody with a dog no longer can, they get their bank accounts frozen because dogs eat too much dog food or something like that. So I think it's important to think about not necessarily what the current government is doing, although it seems to be bad enough, but what future governments will have control and power to do. This is just thinking out a little bit. You need to establish community barter systems to basically get out from under something like a central bank digital currency. You need to start forming these relationships now with your plumber, your dentist, your electrician, your doctor, that type of thing. I could talk for hours about number 4, but what happens when you welcome inflation and interest rates? It basically takes away all this malinvestment. And so really silly ideas that are out there right now, all of a sudden become very unfeasible as interest rates rise. And so something like these pet projects basically disappear because there's just so much malfeasance in it, they become uneconomical. So some of these agendas that are coming out of Europe just become untenable if interest rates rise and money becomes too expensive. And as well, of course, I'm going to pitch my book. Talk to your local credit union, see what they're doing. I could talk for another couple hours about what we're trying to do about this, but that might be a whole different podcast, and I would need the go ahead from my board to actually talk about our strategy going forward. So that's all I have for you, Tanner, but welcome any questions that people may have.
Oh, excellent. Thank you so much. Again, like the other 2 sections of Brett's presentation, if the audience has any questions, just put them into the chat below, and I'll do my very best to answer or to present as many of them as possible to Brett. The first one I might have, so knowing this with Fintrac, open banking, and digital currency, what do you personally see as the most clear and present threat, or are they all equally dangerous? What do you think?
I would suggest, because it's already through, it's already law, Fintrac is probably your biggest direct threat. So if you sort of had 30 seconds with your politician, that would be where it would go. Something like open banking, I think, is probably at least 18 to 24 months out. They won't build the framework in that time. And frankly, the real brains behind central bank digital currencies aren't in government. They're in the cyber currency sector, the cryptocurrency sector. So they're probably years behind something like that. But I think it's important that you still know that this is on their radar.
Right, for sure. Here's a good question. So in talking about those businesses and companies that aren't taking cash, which I've seen myself too, I was walking through the mall the other day and I saw, sure enough, a business that said no cash. The question is, isn't currency legal tender and therefore has to be accepted?
That's a good question. I'm afraid I don't know the answer to that one on a particular business level. I guess you could ask the shop owner why, but beyond that, I'm not sure. But I think again, put your tinfoil hats on. But it's pretty interesting that they basically talked about COVID and how dirty money is. And man, wouldn't you love to just get away from all this dirty money? You don't need to be carrying this dirty money that everybody's handled and things like that. And so I think some of the businesses have taken that to heart, even though they're probably, dinging their margins by 3-4% just because of the fees alone. So,
Right. Here's a good one. Bill's asking, can credit unions determine their own rate of interest? So maybe you want to touch quickly on prime rates and stuff like that, and how banks determine, or at least a credit union, your credit union determines its lending interest, et cetera.
sure, yeah, we do determine our own level of prime, and we take the lead from a lot of other organizations, and really what it boils down to is what the cost is from the Bank of Canada. So we're not big enough to do this, but somebody like a Royal Bank would have a direct line with the Bank of Canada. And you've probably heard of the term the overnight borrowing rate. And I think it's at 3.25 right now or something like that. So what happens is the Royal Bank says, oh man, I need $1 million. And so they go to the Bank of Canada and basically ask for that line. They pay the overnight rate of 3.5% or 3.25%. I can't remember what it is, and then basically tack on a margin onto that, and hence your prime lending rate. So you are correct that each financial institution has their own prime rate. You'll notice right now every single financial institution has the same prime rate, with the exception of TD, which I think are 15 basis points higher. I don't know why they do that, but there must be some reason for it. So,
right. Here's a question from Heather saying, do you think that the banks can fail and then take depositors' money? If so, do you think a massive bank failure is imminent? And is there more safety for clients at a credit union?
Well, that's our bit of claim to fame is we are 100% guaranteed with our deposits. So basically backstopped by our regulator for our deposits. I don't think the Bank of Canada would allow any banks to fail, similar to what they did in the financial crisis in the United States. And what they would do is basically just print until the cows came home to basically shore it up to ensure that doesn't happen. We're looking at options so we don't have to come hat in hand if something really goes sideways. But I might be overstepping the scope of this conversation going into that realm.
Right. No, that's an excellent answer. Thank you. With regards to digital currency, so I'm listening to you, and it sounds to me a lot like 1984. The repercussions of digital currency. I think if Orwell had any idea of what computers were going to be when he wrote that book, I'm guarantee he would have put, centralized currency into his presentation. Knowing that, then Judy's asking, our banks like our RBC, I've seen ATB, CIBC, et cetera. It seems like they're also advancing this push for at least some form of digitalized currency. So maybe why do you think that is? And do you think that they're going to let it happen, or do you expect pushback from them as well?
I think naively they are pushing ahead. and maybe they have a better inside track that they're going to go with Model 1, where there's an integration between the Bank of Canada and the private sector. They're likely doing it from a cost perspective, because if cash disappeared, 75% of the staff at Royal Bank would disappear. You just don't need them anymore. You don't need vaults. You don't need tellers. You don't need cash counters. Effectively, you don't need branches if that happens. So I think nefariously, that's probably where that's going. Again, this is a big conversation that I could spend an hour on, but I think there's basically giants fighting in the world right now. And this is, you know, we could get on our tinfoil hats again about the World Economic Forum is basically against everybody right now. And the commercial banks in the United States, the big guys, not that I love those guys either, but the JP Morgans, the Wells Fargos, they're pushing back. And so basically they're saying, no, we're a healthy commercial banking sector. We don't need CBDCs. We see the flaws in it. You can go to hell, WEF, and we're not putting up with it. And so hence why you've seen so many rate increases as of late, because basically you turn what the WEF is trying to do into malinvestment. And all of a sudden it just becomes unfeasible to do those projects anymore because the interest rate is too high. So now, very tinfoil hattish stuff, but I think probably I might be in the right crowd to even breach this subject anyway. So
Right. Oh, I think so. And okay, so that term malinvestment, I like that term. It's a good Austrian term that you don't hear often in the mainstream world. We'll be able to define for our audience what you mean by, or what, you know, these economists, what we mean by when we say malinvestment.
So basically, in essence, it's just a bad investment. So for example, if somebody came to me and said, oh, I got this great idea. I'm going to build this house, and it's going to be half in a creek, and it's going to be half in quicksand, and I'm going to build it out of straw, and I'm going to, you know, light it with torches. You know, what do you think about giving me $1 million to build my dream property? And you know, you'd look at them and say that's an awful idea, and hence you wouldn't give them a loan. But you know, maybe under a CBD mandate, you say, oh, everybody gets a loan for a home, no matter how crazy the idea is. You want to live in a teapot? Go ahead. You want to live in a hay house with torches that light it? Go ahead. And so there would basically be a ton of those loans into these bad ideas that basically the commercial banking sector protects the whole economy from.
Right. Yeah, that makes total sense. So that's, as far as I understand it, that's the same. It's the same definition. It's another good question. So okay, so suppose that you have a financial sector that decides to well, I suppose the financial sector wouldn't decide, but the government decides to transition the financial sector to CBDCs, to this digitalized, centralized currency. What do you, you know, suppose would happen to the money that the individuals that are watching? What would happen to their money in their savings accounts, you know, investments, RRSPs, et cetera? You know, if you have the abolition of the commercial bank, what do you suppose would happen to, those investments, those savings, all of those things?
My guess is right off the bat, not much. It would just sort of transfer it, and basically they would say to you, you would no longer get cash if you cash these in. You would just have these digital credits, and they would sit in this account either at, you know, a commercial bank or at the Bank of Canada, and you can access them to buy products at will. I think that's day one, though. Day 2, 10, 100, there would be funny business going on. They would continue to create central bank digital currencies for their pet projects. There would be inflation. There would be things like, oh, you know what? I know you saved for your retirement and you've got this nice nest egg, but you're not spending it fast enough. So we're going to put a time limit on when you can spend this, and things like that. Or you're spending it on the wrong things. You're not taking enough vacations or something like that, if that's possible. You need to buy more solar panels or something like that with this. So, you know, this may seem far-fetched, but the thing is that the power of the central bank digital currencies with the technology of cryptocurrencies is there to do this type of thing and monitor and support this type of activity and thinking. So,
Right, right. This Orwellian sort of activity, it's, this Big Brother activity. We'll just take a couple more questions. There's just, we're going through them as fast as we can. Thank you for all of them. They're all excellent questions. This is from Warren, and this one I'm excited to hear your answer, because at APP, just because we're a nonprofit, we're not classically allowed to produce financial advice, but because Brett is, he works with Bow Valley, he's able to do so at his discretion and his will. So Warren asks, what are your thoughts about having silver and gold in your portfolio?
I love it. Personally, I do have it in my portfolio, and I can't give too much information around it, but maybe I'll just say this. We're looking to back our organization with precious metals to basically get away from this. I hope it's not too far away. It's something that we continue to think about. I'm probably overstepping my bounds even talking about it, but this is something that we're looking to do to basically back our institution up with hard assets.
Right. Well, I won't press, but that if so, that's exciting as from my standpoint, just as an economist who's studied and is interested in the more classical economics and a return to sound money. Here's an excellent question from Sean. He says, if the big banks such as TD, CIBC, et cetera, had massive defaults on mortgages, right? Especially if you have another increase in interest rates here with variable rate mortgages. What would happen? Sorry, I'm reading it closely here. What would happen? Aren't the banks still obligated to pay interest to the Bank of Canada? What would happen if there was such a high percentage of foreclosures that the bank couldn't pay the interest? Does the Bank of Canada not get possession of the assets of said bank? That's a kind of a complicated one, but it's a good question.
Yeah, I think I know where you're going with this. Is basically own nothing and you'll be happy type thing, and this may be a mechanism to do something like that. I haven't really thought that through. That may be the tool. The easier tool may be just to implement the central bank digital currency and basically just weave their way into it that way. It's a good question. I'd have to think that through a little bit more. But yeah, I don't really have a good answer for that. Traditional models would suggest that they'd bail them out somehow, or there'd be some kind of consolidation between the banks. But we're not really in a traditional world anymore. So,
right. Now, I know you had written a brilliant paper on inflation, and maybe just for the last couple questions for our audience here, what do you see? We have a lot of inflation in Canada right now. What do you see, even in the next year or two, as best as you can prophesy, what do you think the inflation picture will look like in the country?
Inflation doesn't go up in a straight line. Even though we're seeing a little bit of relief now, I think you'll really start to see it pick up. I think this fall is going to be very interesting, especially what's happening, particularly in Europe and Russia. You may have heard this one, but some people blew up NORAD 2 and NORAD 1 pipelines. So effectively, Europe can't get natural gas from Russia if they wanted to. They're going to have a very cold winter. And especially in Europe, energy prices are going to absolutely skyrocket, in my opinion. Will there be that arbitrage between North America and Europe? Likely somewhat. They really don't have the infrastructure to get LNG, liquefied natural gas, over to Europe right now in mass quantities, although I still think we will see a pretty big spike in our energy prices. And effectively, when you see energy prices increase, the price of everything increases. The food increases because it's so based on energy. Gasoline, of course, moving goods and products around increases. Materials, you name it, everything goes up as the price of energy goes up. And so as you know, the oil and gas sector has been under a massive attack over the last number of years, to the point where companies won't invest in natural gas, oil and gas any longer. It's just too much of a risky business. They think they might get shut down. This, in my opinion, is going to lead to a worldwide energy shortage. Hence why you're going to continue to see inflation rise over the next number of years.
Right. Oh, I know that the situation in Europe is, it's unfathomable. You're right. It's going to be a cold winter. And based on the policies that our federal government is trying to, and currently is imposing upon us here in Canada, and Alberta, certainly if we're not careful, and if we don't stand for what we know to be conducive towards human flourishing, I have no hesitation to say that we'll in some capacity end up the same, I think. Hey, would you agree with the way that Europe is right now?
I would agree, because even if you started tomorrow and said, you know what, everybody drill, baby, drill, turn on the pipes, let's go, it would still take 3 to 5 years to ramp things up to a point where you're having some meaningful production in oil and gas, to the point where it would actually impact it. I'll say this as a bit of a jab, but if you're in the camp that Russia shouldn't have invaded Ukraine, the best thing that we could have done is basically drilled as much oil as possible. Because if oil is $20 a barrel, Putin wouldn't have a vehicle to basically fund his war machine. And I can't say it any simpler than that. It has so many bad implications to it. And I think bit of doomsday scenario, we're going to see a lot of cold people in Europe, and we're going to see a lot of food shortages in poorer countries this winter.
Right, for sure. Well, I suppose so. Then to end, we'll just end with one last question. Again, thank you all for listening. Thank you for joining tonight. We'll do a bit of a close here after this last question. But what would you say to leave our audience with? I know each individual is different and each financial situation is different. But what would you had a broad piece of financial, advice to give Albertans right now? Just some financial common sense. What would you say? What comes to the top of the head?
Top of mind is probably like, ask questions of your financial institution. Most of the time, people spend more time picking out a TV than they would picking out their financial institution, which is really ironic because most of their money is in their financial institution where it resides, whereas a TV, you could probably get for $200 a pretty decent one these days. You need to ask some tough questions of these financial institutions. You don't settle for the person sitting at the front desk either. Talk to the branch manager, talk to people in the higher ranks, and get the answers that you're comfortable with, because I think it's really important. And I think people's true colors come out when they're under pressure. And you need to understand that what they're going to do when poop really hits the fan going forward, which I foresee.
Right. So with that, thank you so much, Brett, for joining us this evening. I learned a whole lot, and the information was, although it's naturally complicated, you made it digestible for even individuals like myself who have to really work to understand the monetary system and the monetary machine that is the Canadian banking system. So is there anything you'd like to leave our audience with? Do you have any final closing thoughts before I finish up?
Yeah, no, if you didn't get a chance to ask your question or you think of something else, happy to answer an email. Email is probably the best way to get a hold of me. I popped it up there a few times. Hopefully you got it. May take a few days to get back to you, but I endeavor to try and answer everybody's question. And really what we're trying to do is get banking back down to an individual level where it's accessible to everybody, and everybody can get their questions answered to their comfort. And that's what we endeavor to do, for one final plug for our organization. So.
Perfect. Well, thank you so much. I see there's a lot of thumbs up, a lot of clapping hands. People were definitely happy that you were able to join us tonight. Again, from the APP, we want to thank you. David, if you want to add a couple of closing statements, that would be just perfect. Oh, you're muted though. Not just yet.
I'm muted.
Very good. There, now you're not.
Yeah, I do want to thank Brett. Thank you for the time that you've invested in with us tonight and preparing your presentation. Whereabouts are your current locations, just in case people are wondering?
So our current head office is in Cochrane, but we also have branches in Banff, Canmore. We have 2 in Airdrie and 1 in Calgary. We don't capture a lot of the north, but you can do most anything online these days, with the exception of cash, which doesn't really help. But as long as you have access to a credit union ATM, you can get cash out without getting dinged a fee through any credit union. So maybe you've got a credit union in your community that you want to use, we can generally help you out. I would definitely encourage you to talk to your local credit union in your area to see what answers they come up with, that sort of some particularly pointed questions that you may have. But we're happy to help out even if it's at a distance. So thank you.
Okay, super. Thank you. We'd like to thank everyone for joining us tonight. Next week, Wednesday at 7 p.m., we will have Michelle Stirling from Friends of Science, and she's going to talk about the implications of the WEF and their population reduction. In other words, they want your carbon, not just your carbon footprint. So thanks to everybody. Have a great night, and we'll see you next week. Thanks, Brett.
Thanks very much.